We have made changes to our future vehicle lineup to expedite the release of new models ahead of the previously stated start of production in the second half of 2025. As a result, we anticipate that these new vehicles, which will include more affordable models, will be released in early 2025, if not earlier. They will be produced using the same manufacturing lines as our current lineup of cars and will incorporate elements of both the next generation and current platforms. Tesla mentioned launching new models more quickly that would combine elements of their present platforms with the future generation platform they've been talking about. These cars would be manufactured. There is a moat around Tesla because it was the first mover, but they maintained their share to innovation. Everyone criticizes this guy for a million different reasons, but at the end of the day, when you've asked somebody if they want to buy an EV, they want it Tesla as one of the leading manufacturers. This is the market's constant speculation, and it hasn't happened there. No company has yet transitioned to the effectiveness, efficiency, and productivity that the Tesla has around drivetrain, engine, chipsets, batteries, and so on. Tesla has experienced its fair share of ups and downs brought on by a volatile market and a quickly evolving technology environment. Following CEO Elon Musk's announcement that the electric vehicle manufacturer intends to start producing new, reasonably priced EV models by early 2025, Tesla shares recently increased by 12%. Kevin O offers his perspectives on possible privatization. We can observe that Musk's financial plans, which take advantage of the higher stock price, are calculating yet daring at the same time. These strategies also take place in the context of broader economic challenges that add layers of complexity to Tesla's operating environment: our supply chain disruptions, inflationary pressures, and geopolitical uncertainties. Stay tuned as we explore the complex web of factors influencing this trailblazing company's future. But before we do, please hit the like and subscribe buttons. As we shift our attention to the electric car market, it is evident that Tesla continues to play a crucial role in defining its landscape with a reputation for innovation and excellence. Welcome to Tesla Insights, and let's get this video started. Although Tesla has set high standards that propel the industry ahead, there are several obstacles in the way of mass EV adoption that Tesla and the sector as a whole must overcome. The infrastructure needed to support EVs, notably in terms of charging stations, is one of the main obstacles. According to well-known Canadian businessman and Shark Tank host Kevin O, metropolitan areas are increasingly outfitted with charging facilities, making short trips and daily commutes easier. When you leave these urban hubs, the narrative shifts. Long-distance driving is still a major challenge for owners of electric vehicles because of the poorly spaced charging station infrastructure in rural and interstate locations. Gap has a big influence on customer behavior and attitudes about how practical it is to own and operate an EV for all kinds of transportation, as well as how quickly EVs are being adopted. Automobiles have not kept up with the first hopeful predictions. The initial enthusiasm surrounding the launch of new electric vehicle technologies has subsided as buyers face the practicalities of incorporating these cars into their daily routines. These include the longer charging time for EVs compared to conventional vehicles and the greater initial cost of EVs lead to a decline in adoption rates. The possible privatization of Tesla is one of the maneuvers that is being discussed the most. According to Kevin, if this strategy works, it might be a game changer for the business, giving it more opportunity to create free from the constraints of market volatility and quarterly financial reports. Kevin O adds that a crucial element of Musk's plan is taking advantage of Tesla's recent stock performance, which has seen the company rise over 40% from its recent lows. This is a good time to do this. Musk's suggestion probably entails depending less on high debt burdens and more on financing based on the high stock price. This tactic is especially clever since it lessens Tesla's financial risk and debt load, turning it into a strategic turn that takes advantage of the market's momentum in the company's favor. Benefit furthermore, Musk's strategy might involve talking to institutional investors who are already shareholders in order to perhaps include their current equity in the privatization agreement. By taking advantage of the current market conditions, Musk could not only secure the necessary financing, but also guarantee that these important stakeholders continue to be involved and supportive of Tesla's long-term vision. This could reduce the need for significant external financing, paving the way for privatization while preserving stability in ownership and investment. In effect, Musk is putting Tesla in a position where it can advance fearlessly in the current global economy, free from the limitations that usually accompany being a public corporation. All industries are battling a number of macroeconomic issues that have an impact on their strategies and methods of operation, like many others. Tesla is confronted with formidable obstacles, including as disruptions in the supply chain and inflationary pressures. These difficulties are not insignificant. They have an effect on cost structures, manufacturing schedules, and ultimately, consumer prices. Supply chain disruptions, especially in the automotive industry, can result in lower production volumes and higher costs, placing tremendous pressure on businesses to stick to their production schedules and control expenses. These disruptions can also be caused by delays in the delivery of raw materials and logistical bottlenecks. In order to reduce the risk associated with supply chain volatility, Tesla has been navigating these turbulent waters by expanding its inventory of essential components and diversifying its base of suppliers. Another significant obstacle for Tesla is inflation, which reduces purchasing power and raises operating expenses. This entails addressing. Tesla has been proactive in readjusting its pricing tactics and investigating cost-effective manufacturing procedures to retain profitability without compromising on quality and innovation in reaction to rising costs of raw materials and components required for car manufacture. In addition, Tesla is growing its global production footprint by building additional facilities in key areas across the globe. This geographic diversification helps to reduce risks related to local economic or political unpredictability, but it also brings Tesla closer to important markets, lowering transportation costs and enhancing the effectiveness of the supply chain. The company's dedication to innovation complements its proactive approach to resolving economic issues. Tesla is still spending money on R&D to advance battery science and boost system effectiveness, maintaining the competitiveness and consumer appeal of its products in the face of broader economic pressures. But the Tesla journey never ends. Every day is an exciting discovery with ups and downs that makes it even more interesting, which is why Tesla keeps drawing more and more investors down its rabbit hole. But do you know who else shares in pro-Tesla optimism? That would be today's sponsor, Seeking Alpha. When it comes to Tesla's impressive growth, this example highlights the possibilities of investing in rapidly expanding industries such as electric vehicles, EVs, and renewable energy. Nevertheless, investors must take into account the associated risks and do due diligence regarding the competitiveness of the EV market. Today, we've taken a look at some of the variables that could affect Tesla's stock performance and investments, including changes in regulations and the economy-detailed examination of Tesla's place in the rapidly changing electric vehicle market, Elon Musk's strategic moves, and the wider economic difficulties the company faces. We also looked at Kevin's observations on Tesla, the innovative cyber technology, its potential to upend the auto industry, and the social effects of Musk's promoted remote work. How do you believe these factors will affect Tesla's trajectory and the larger market? Please feel free to comment below. If you found this analysis useful and would like to stay up to date on all things related to Tesla and the dynamic field of electric vehicles, please remember to like, subscribe, and follow Tesla Insights. Thank you for your time, and until next time.